Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to another new episode of Markets Next Week, where we look at what happened in the markets last week, and how we can plan for a better trade next week. And remember, this is analysis for December 27, Monday, the week starting from tomorrow, Monday, 2021. So if you're not subscribed, please subscribe and share to your friends and colleagues so that benefits all of us. So without wasting time, let's get into the charts and price actions and patterns. So what was the week like? The thing is, look at this weekly candle. It's a hammer on the Nifty. The hammer is a bounce, of course, with the wick size. It indicates it's a bounce, and here also indicates a bounce, but it's not exactly a hammer on the BANKNIFTY, I mean. So it is a green with 0.5% up. There we go. So basically, hammer was formed, and the hammer was formed from a dip of 3%. Right? It was 3% from the previous week down, and then from that it recovered to gain 0.5% above the previous week's close. Similarly, BANKNIFTY. So BANKNIFTY, here is the thing. BANKNIFTY did bounce back, but it could not sustain. So remember that there was a gap that was formed when it actually gapped down. Here also it gapped down, but this gap was closed with a bounce, and BANKNIFTY, the gap remains there. The gap remains there, right? So that's going to be a big resistance on the upside of the BANKNIFTY. Now intraday in the sense, daily candles, if you look, this is exactly what happened the last 1 week. 1, 2, 3, 4, 5 days, right? A clear dip on Monday, correcting 11.5% from the top. Nifty correction, I'm saying, and then bouncing up, right? Indecisive, and then again bouncing up, gap up, and then indecisiveness, and then getting resistance, and then going down. Similarly in the Nifty, it was a gap down, then bounce up, and a weak consolidation, and then again another gap up, got met with resistance, and then came down. This is the action, right? So 17,000 is maintained in the Nifty. That's a good thing that we can. 17,000 is a psychological rounding number, but look at Nifty, right? This level where it is closed is below 35,000. It's a rounding number, psychological rounding number, just like the 17K. So clearly, BANKNIFTY is showing some weakness, and Nifty has done a decent bounce up from the bottom last week, right? After a major dip on the previous week. So that's the price action. Look at Bollinger Bands. On the Nifty, you can see that the bearishness, the lower band expansion on the downside has stopped, and there is some kind of consolidation that we can see. But look at BANKNIFTY. The expansion is on the bearish side, clearly downside, which indicates further consolidation further bearishness can be expected on the BANKNIFTY, and further consolidation may be there for the Nifty. That's what it indicates, the Bollinger Bands. Remember that the resistance for the Nifty occurred at the middle of the Bollinger Band. That's 20 moving average. Exactly on the 20 moving average, it got the resistance, and then it stopped the further up move on the last day of the week. But Nifty, it could not even bounce and clear the gap, right? It could not even close this. Forget about the 20 moving average. It does not even come closer to that. So clearly on the Bollinger Bands also, BANKNIFTY showing weakness, but Nifty met with the resistance after a good recovery from the bottom. Look at the support resistance. So Nifty 16,900. That's Fibonacci 38 from the last week. That's going to be the first support if the 17,000 is slipped. Then after that, you have 16,700 to 750, which is the previous swing low and previous resistance. After that, you have 16,550 to 16,650. This is exactly how it looks like, right? This support where it is right now, 17,000 is gone. Then you go back to the 16,900, which is Fibonacci level, and then slip down, slip down, slip down, right? What about upside? 17,200, 300. It's going to be the first resistance upside, then 350, 17,350, 400, then 17,500, 600, 17,500, 600. Resistance, 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 and those are the three resistances upside, three resistances on the downside. Bank Nifty 34,350, 34,750 is going to be the first support downside, which also happened with the Fibonacci 61. 33,950, 34,100. So 34,000 there near to that is going to be previous swing low and the previous resistance and the rounding number. So that area is going to be the next support if in place. 34,350 is gone. Then for the downside you have 33,300, which is also a swing low. On the upside, Bank Nifty has got 35,000 to 35,300, which is a rounding number also. So that's going to be the first resistance to take out 35,000. Then above that 35,600 to 35,900. So near to 36,000 is where the next resistance is going to be. 35,000 first resistance, 36,000 next resistance, and above that you have 36,600, which is also a Fibonacci 50 resistance. Look at what we are speaking about here. This is Bank Nifty. It's at a support here at 34,350, 4,750, that back, and if that goes, you have 33,950, then that goes down here. Similarly, upside, resistance 1, resistance 2, and resistance 3, right? So making note of this resistance. So this chart is showing that there is a moving average, that is exactly where the resistance got, and this is clearly showing a lower high, lower low pattern, which is very bearish on both indices. It is that. So you have to understand that this channel top has broken, and this previous swing high of near to 16,500, 600 so on has to be broken before we can say that the recovery is complete. Until then, we may further go down or we may consolidate in this range. Same here. Unless and until this Fibonacci 23 level is taken out and the channel top breakout happens, we cannot say that the recovery is happening. Until then, it may further go down or consolidate in this zone. Now look at the momentum. Momentum is sideways on daily and weekly on the Nifty. Bank Nifty, the momentum is bearish on the short term and sideways on the weekly, and monthly also has slipped down. That is worrisome. So monthly momentum of Bank Nifty has slipped to sideways from the bullish zones, while Nifty, the monthly is bullish and daily short term is sideways, not bearish. So Bank Nifty clearly bearish from the momentum perspective. Making note that there is a Nifty 4-bar bullish momentum divergence which is in progress. It's a monthly, so it takes time to come to for the action to come, but the 4-bar divergence is there on the Nifty, and both Nifty and Bank Nifty has got what it has got. It's a momentum reverse divergence which is bullish in nature, which is in progress. You can see that it has bounced from here. Here also the price is coming down and the momentum is going up, and then it's diluted because a large number of, so it may not be fully effective, it may not meet the exact target, but if it is meeting, it can go up to 17,500 also, which is a good thing. So divergence, reverse bullish momentum divergence exists in both the indices, and Nifty has got a monthly divergence also. But otherwise momentum is in the sideways. As we discussed on the Nifty, it's bearish on the Bank Nifty. So another indication of the overall trend, right? ADX is showing that it's in the DMI negative zones, and the Bank Nifty also it's on the DMI negative zones. And the bearishness is rising because the green, the strength of the trend is also seen rising. That means bearishness is rising. Now open interest data, if you see, this is for the December 30th, the monthly expiry that's going to come next, the last week of the month. So maximum resistance is in at 18,000. Call writing also is seen at 7,500. Similarly, support is in at 16,500, and also 7,000 also has got support after that, the highest. Bank Nifty similarly 34,000 and 33,000 both have got good put rating. That means that's a support, and then the upside 36,000 and 37,000 is also showing good resistance or call writing is seen at these levels. So mark these levels and correlate that with the chart levels that we have seen earlier on the support and resistance, and then you'll get to know where you are to enter and exit clearly. Now volatility, if you see, it's flat. It was flat last week at 1%, hardly moved. 16.3 has come down slightly to 16.1, so it's a lower level of the range, and then range is between 15 and 20. So mean reversion could happen, and the it could certainly spike up. So Vega positive strategy is going to work out, but it spikes up, then markets could be going down. So anyway, it's the lower range. 16.3 is an implied volatility of the Nifty, and the historical implied volatility is 21, and IVP is 47% from the 70 levels. It has dipped to that level. So that's the volatility of the indices, and the put call ratio, the open interest analysis is showing that it's 0.87 and 0.8 for Nifty and Bank, which is not bearish. It's kind of bullish, can say. Although it has to be above 1 to be really bullish, but it's not bearish at least. Now short buildup is clearly seen in the futures data on the Nifty, but Bank Nifty is showing not exactly short buildup, but it's long winding. That means people who are long on the Bank Nifty have now started unwinding their positions to short, right? So that's the open interest in the volatility. This is what we are talking about, right? So the open interest is clearly showing that the dominating part is a call writing, right? Huge number of call writing. That's where the highest writing has happened on Nifty and the Bank Nifty also. Sectorial watch, if you see the IT sector. So overall you can see that all the sectors have moved up. IT 3% and it's close green. And IT is only sector we can say it is bullish from the momentum perspective. So it's time to pick up stock in the IT, right? FMCG is 1% up, metal is 0.5% up, auto is 0.5% up, pharma is 2% up. The reality is kind of flat. So all the sectors have moved up, and IT is clearly moved up with bullishness, but other sectors, the momentum is yet to catch up. It's in the sideways of the short term. So you'll have to wait for that before we think about that. You'll have to watch whether which other sectors are showing the momentum spikes in the next week, right? And crosses over to the bullish ones. So probably you'll have to take the call. But as of now, IT is strong. The institutional participation fee is 6,600 crores of selling again on the last week of holiday season. Interestingly, DI bought more, and that is the reason for the bounce. So 9,675 crores of buy happened. So that's clearly decisive reason for the bounce that happened the last week. Derivatives, longs, net longs also moved up on the FI side, on the institution side last week. Now the global markets, if you see, there was some Fed event last week. Now post the Fed event, the reaction by the market was positive, and market recovered 2% up on almost all the indices. Nasdaq, S&P, Dow Jones, all of them moved up. Dollar, actually you can see the dollar dipped last week, 0.5% was down, dollar index, and accordingly you can also see that the USD INR currency pair also has fallen down really 1%. So it has now come back to 75, while we are fearing whether it may hit 77 levels, but it has cooled off. Some kind of intervention might have happened. Crude oil moved up again 3.5%, and again it is moving away from the 70 levels and reached the 73.5, which is little worrying because it had shown big gold of several weeks. Now it is again spiking back. Gold is kind of trying to jump up from that support zone and then move further up. Look at this. Crude oil was spiking. Gold also is showing some signs of spiking from this famous handle part of the cup and handle. So it's taking its own sweet time to move up. Right now it's consolidation, but last week saw a spice, which could be the beginning of another attempt to hit the channel top. No. So gold spiking, crude spiking, rupee cooling off, right? So as long as the crude oil does not spike too much, it's fine for the commodity side. Stock picks actionables, of course IT is doing good, and so we can confidently pick up Techman, which is kind of breaking out with great momentum, volumes, trend, and in a trend line. It's a weekly breakout that you can see on the ticker. Now on the bearish side, Bajaj Auto has given up in the major support and then seems to be indecisive, and in case if there is any movement on the downside, that can give you a good good short trade, because the momentum is weak. You can see that it is dipped. On the weekly, the momentum is gone to the bearish zones. The daily also it is gone. Trend is rising with bearishness, ADX. So it's clear bearish trend that you can see in Bajaj Auto. Okay, so Takam on the long side, Bajaj Auto on the short side. 2 picks for next week. Now on the NICEs, this is an actionable that can be done, right? This is a debit strategy, it's not credit. It's bear put. You're selling 17,150 put, and then you're hedging it 17,400 put, right? So it has got reasonable probability of profit of 70%, and risk reward is also fine, 1:0.5. And look at the margin, hardly 17,000 is the margin. So it's a better play than when you're not sure whether it may fall further down. There is a big chance of doing that, but market has already corrected 11.5%. Would it further fall? Is that not time for the correction? It will bounce up, so at this stage, as long as you're sure that it may not spike above the 17,200 in this holiday vacation with low volumes, you can be in a safe side with playing this vertical spread, right? So that's index play. Just to wrap up market last week, completed 11.5 correction, 11.54% correction from the top, right? That is pretty reasonable, good correction, right? 11.5%, and it bounced back from that level. And Bank Nifty is the very point. It seems to have corrected well, and then it could not bounce up fully and fill the gap. So, and momentum wise, chart wise, Bollinger Band wise, all Bank Nifty shows clear weakness as compared to the Nifty. Nifty is shown a good bounce. So, considering that, different factors like the lost momentum, the lost trend, bearish trend, and the charts and the Bollinger Bands, and all of, and along with that, the Fyers selling that continues even to the last day of the vacation period, right? So that gives me the thinking that the bias should be mild bearishness for me for the next week, right? Mild bearish. A mild is because recovery is possible because correction has happened, and 70,500 is still 500 points away, and there can be another attempt to conquer that in the coming week. Whether it will succeed or not, we'll have to wait and see. But yeah, so that is the reason why it's mildly bearish, right? And trend line that we talked about, the lower high, lower low pattern has been broken out before we can decisively say that it is back to bullishness or back to a recovery. But until then, recovery is not there. It could be either it could consolidate or it could break down further. More correction can come, either of that. And so you cannot get a clear picture on what is going to happen. All this that we can do is watch the Bollinger Bands and watch the price action and make sense and see what makes sense of that. Right. So as soon as the expansion is clear and the price action is saying that it's continuing the trend of bearishness, then we can be sure. Otherwise, if that is not happening and it shows symptoms of moving up again, then it's consolidation. And if it is moving out of that lower high, lower low pattern, then clear it is bullishness, right? So VIX has cooled off. Last week also it was flat, and maintaining 15 to 20 levels is kind of fine. As long as it doesn't go above 20, it should be fine. But since it is a low end of the range of the volatility, there's a chance that it can spike up towards the 20 back again. That's a possibility. So if you are playing options, need delta neutral strategies, this Vega positive strategies like double dial and also could be a good bet. Once again, the last two slides are a repetition of the last time. Also, as we said, this may still be a time to get good quality stocks at cheap price, and this may be time for long time investment, picking a few stocks on that, and then probably using that as collateral for the options selling if we are playing the options. right? So market cycles keep changing. We had a good rally, and then we had a consolidation. From then it went to bearishness. Now we don't know whether it's going to be consolidation or bearishness. So market cycles keep changing, and we have to adopt our strategies and trading styles according to how the market cycle changes, right? So that's a wrap up of what I have for the next week. If it helps you in any way, consider hitting the like button and share it to friends and colleagues. Happy trading, happy learning, happy learning.